and today we are starting with chapter number 1. We will be covering some important theory as well as the important questions which are asked in the exam generally. So let's start. First is foreign exchange risk, because this first module is completely for forex. So there we are covering the important part, that is forex risk. Now what is the meaning of foreign exchange risk? Firstly, what is the meaning of foreign exchange? Before going to the risk, what is the meaning of foreign exchange? Foreign exchange means it comes when we have two things. Number one, either we deal in foreign money or foreign currency. Understand this. Either I deal in that foreign currency, means I am holding that foreign currency in that, let's say dollar. We'll consider only one thing, dollar now. Or second is exchange dollar to rupee. Exchange dollar to rupee, right? So both the things are called as forex. Okay, it means if I am holding the dollar, then also it's called as foreign exchange, and if I am doing the exchange against the rupee, then also it's called as foreign exchange. Okay, so meaning means whenever we have two currencies, only then it's of any use. If I am dealing in single currency, dollar to dollar, there is no forex. If I am dealing in this dollar to rupee, then no forex. Okay, so exchange rate affects you only when you are dealing in two currencies. So basically the risk will be there only when you will be dealing in two currencies, minimum two. It can be two or more. Minimum two if you deal, then only it will affect you. Okay. So foreign exchange risk refers to the losses that an international financial transaction may incur due to the currency fluctuations. Okay. Currency fluctuations. What do you mean by these fluctuations? Suppose, let's say, we'll take one example over here. It is, suppose $1 equals to $1, let's say, equals to rupees 80 now. Okay, let's say 80. Now what happens if this 80 rupees dollar moves to, let's say, rupees 90 tomorrow, and if I have purchased this dollar at 80, what will I do? I'll immediately sell it, because it is affecting me on the positive side, because I've purchased it at 80 and now it is 90. So if I sell it, I'll get 90 rupees, isn't it? So this is known as a currency fluctuation. It can be in the reverse direction also. I've purchased at 80 and it can go to 70 also. Okay, when 80 goes to 90, it means dollar is stronger. When 80 goes to 70, it means rupee is stronger. Okay, that is the meaning of this stronger. Whenever this amount increases 80 to 90, remember I am again telling you, whenever rupee goes, $1 equals to 80 goes to $1 equals to 90, then it means dollar has got stronger. Because earlier I was purchasing dollar for 80 rupees, now I am purchasing dollar for 90 rupees. So dollar has become stronger, and vice versa over here. Okay. Foreign exchange risk can also affect investors who trade in international markets and businesses engaged in import-export of goods or services to multiple countries. So whom all does the forex affect, this risk affect? It affects investors. Suppose if I am an investor, I have brought dollars at 80 and it moves to 70. Then I am at risk here. Always remember, what do you mean by the risk? The risk means losses. Suppose if I have brought it at 80 and now it is going to 90, then there is no risk to me, because I purchased at 80, now it is going to 90. So it's not a risk to me. I am earning more. Risk is when it goes in the reverse direction. I have purchased it at 80 and then it goes to 70. Now there is a risk, because the word losses come in over here. So forex refers to the losses, not only losses, not the benefits. Okay. So it affects whom? Investors who trade in international markets. Businesses engaged in import exports. Here, businesses means like many companies. Okay. All the companies, majority of the companies, big companies in India are engaged in what? Import and export, right? So when they are engaged in import and export, they'll definitely be affected by the forex risk, isn't it? Who trade in, so investors, businesses, or services to multiple countries. So the software companies, They provide services, they don't provide products. So all these are affected. Even the retail investor is affected to the effect. Why? Retail transfer of money. Suppose if I have to transfer money to my near one in USA, if the dollar moves from 80 to 90, I'll have to pay more in that case, isn't it? So it will affect for the banking transactions also. Okay. So who all are the main sufferers or main elements who are affected? One, on a major scale, one is investor, second is businesses. These two are the main elements over here. Okay. What are the types of risks? One is exchange risk. It is most common and obvious risk in foreign exchange dealing operations and arise mainly on account of fluctuations in exchange rates and or where the mismatches occurs in the asset liabilities and receivable payables. Exchange risk means what? Most common and obvious foreign exchange dealing operations. Okay, in dealing operations on account of fluctuations. This word is important over here. Fluctuations. As we saw earlier, 80 to 90. Suppose if I have shorted here, one thing I'll again explain you. Long position means what and short means what? Short. Okay. Long means if I buy now, $1 equals to 80. I buy. And then I sell at 90. So that is long. Short means $1 equals to 80. I sell now. Here I am selling first. I sell $1 equals to 80 and then I buy when it goes to 70. So this is short position. So understand, if the dollar goes from 80 to 90, the one who is in the long position will benefit, but the one who is in the short position will suffer losses. Okay, because he has sold. Short position means he has sold first. Then he'll have to buy it at a higher rate. Okay. So, if the dollar goes up, means if the rupee goes up 80 to 90, then the one who is shorted will suffer. So, these are known as fluctuations. So, it is most common and obvious risk in the foreign exchange dealing operations and arise mainly on account of fluctuations and or when there are mismatches in assets and liabilities. Means what? What do you mean by this? Assets and liabilities. It means, suppose the balance sheet of any bank consists of two parts. Okay, one is the India operations, second is the forex operations. So if there are mismatches in the forex operations, then also my exchange risk is affected. Okay. Second is settlement risk. Settlement risk is the risk of failure of the counterparty due to the course of settlement, during the course of settlement, due to the time zone difference between the two currencies to be exchanged. That is, when one party performs its part of contract by delivering the currency to be delivered by it, but the counterparty fails before delivering the currency to be delivered by it in a different time zone. This settlement risk generally happens between India and US, because when it is day in India, it is night in US. And suppose today is what, 1st of August. 1st August has started today over here, but in US it has not started. US it will start when we are at night. So there is a time zone difference over here. So this time zone difference creates the settlement risk. Okay. So due to time zone differences, remember this. And second point over here is the counterparty. Counterparty fails due to this time zone difference. Okay. Third, country risk. It is a risk of the counterparty situated in different country, unable to perform its part of the contractual obligations despite its willingness to do so due to the local government regulations or political or economic instability in that country. Now let me give you one example over here. See this, in country risk what happens, suppose I am invested, let's say I have invested in Pakistan, okay. I will never invest, but if I had invested in Pakistan, let's say 5 years back. So what happened in last 2 years? Everything has gone shattered. Inflation is high. The government controls are very weak. So in that case, what happens? Even though my buyer, whoever is the person who is doing the business for me, even though that person might be ready. But what happens? He might not be able to send the forex to me because the problem over here will be the country will stop him. Do you know, suppose in Afghanistan, suppose somebody is having a business in Afghanistan and I've sold to somebody, let's say I've sold to somebody in Afghanistan. Okay. But what happens? Afterwards, let's say I've sold, then at that time it is a democratic government. Afterwards, what happens? Taliban takes over. So Taliban tells that person that you cannot send any forex out of Afghanistan. So in that case, what happens? My money is locked. Why? Is my party bad? No. It is a government which has started doing something. Okay. So due to the local government regulations or political or economic instability. Okay. So country risk is mainly due to the government pressures. Okay. Everyone download Adda 24/7 app on your mobile. In this app, you will be getting the premium study material plus live classes, ebooks, tests, everything. For clearing your CAIIB exam, you need only 3 elements. Okay. Number 1 is classes. So you get live classes, video classes over here. Then you require books, classes. Then you require books. So you get ebooks over here. To check your knowledge, you require tests. Okay. So tests are available over here. So all the 3 things which are required are available. So that's why immediately download this premium app. Okay. Adda 24/7 app. Which of the statements is false? Now let's come to the question time. Forward exchange rate is good predictor of future spot exchange rate. Forward exchange rate and a future spot rate may not be the same. We want false. Okay, look at this. We want a false one. So forward exchange and future spot rate may not be the same. Forward exchange rate is an unbiased predictor of future exchange rate. The spot exchange rate is a good predictor of the future exchange rate. So which one of them is false? We want false now. Forward exchange rate is a good predictor of the future spot exchange rate. So that is true. What is the forward rate? Forward rate means what all can be there as a spot in future. What is spot? Spot means today's rate. Suppose if today's rate for dollar is $1 equals to 80 rupees. Okay. So after 3 months, what can be the rate? So that what can be the rate is known as the forward exchange rate. So that is true, but I want what? False. Okay. Forward exchange rate and a future spot rate may not be the same. So that is also true. Forward exchange rate means this is a contract booked. This forward rate is always a contract. Means what do you mean by this? See this. $1 equals to 80 today at spot. And the forward rate I am booking for 3 months later. 3 months. Okay. Which I am booking. Let's say it is 80 over here. Then it is 82. I am booking it for 82. Okay. What does it mean? I am assuming, I am guessing, this is a guesswork. So this is a forward rate. And actually when the 3 months come, the rate may not be 82 at all. The rate may be 80 again. The rate may be 79. So forward exchange rate and a future spot rate may not be the same. That is also true. The forward exchange rate is an unbiased predictor of the future exchange rate. So unbiased predictor. So it can give a prediction. So forward exchange rate is an unbiased predictor. That is a true option. Why? Because when I book this on basis of some guessing, on some experience, on some technical analysis, right? So this can be a good predictor. And what about a D? Spot exchange rate is a good predictor of the future. So here, control international trade is out. Nobody can control international trade, right? So you can only be a participant in that. So D is out. Now we have to remove out of these 3 which seem to be the correct ones. To ensure country's balance of payment remains in equilibrium. To accumulate means what? RBI goes on collecting the dollars over here. So it's not the job of RBI. The dollars are collected to that level only up to the time they are sufficient for the country for buying the imports. We shouldn't go on accumulating heavily. So that is also wrong. Now, fight is between A and C to ensure the implementation of country's exchange rate policies. So, implementation is done by whom? Implementation is done by commercial banks, commercial and cooperative banks. Okay, cooperative banks. RBI prepares the policy, exchange rate policy. So the correct answer is this: to ensure country's balance of payment remains in equilibrium. That is the main job of RBI. If your balance of payment does not remain in equilibrium, there will be two problems. One is our external trade will be affected, import and export, and secondly, the inflation will rise, huge rise. So it also affects country's inflation. Remember this, okay? So A is the answer. Next one. The exporter shall necessarily submit the export documents to the bank within 15 days of from the date of documents, 15 days from the date of shipment, 21 days from the date of documents, 21 days from the date of shipment. So what is the answer? A, B, C or D? What do you mean by this? Exporter shall necessarily submit the export documents means what? Suppose I am the exporter. Look at this. I am the exporter. Okay. And I have done some exports. Okay. I have done the exports over here. And there is a buyer. Let's see. Let's not talk about the buyer right now. So how will I do the exports? I'll do the exports via ship. Right. Ship. Let's say mainly ship. 90% it is done via ship. Okay. It can be done through air also or anything, but mainly via ship. So once I send these goods via ship, I'll be getting the bill of lading, BL. Generally, I get this BL. So this BL date, whatever is the date of this BL, means onboard date. This is known as onboard date. Whatever is the onboard date, from 21 days from this date, I have to submit the documents to the bank. Or AD we call it. Bank, actually the bank word is not correct. It is AD, authorized dealer. Okay. So it is 21 days from the date of shipment. Yeah. Everyone subscribe to Officers Adda 24/7 YouTube channel. In this channel, number one, you get a free YouTube series, free YT series on all the subjects of JAIB and CAIIB, all the subjects. Secondly, you get this latest updates from IIBF. All the updates you get. Updates means whatever are the, like, see this today morning it came that JIB registrations have started from IIBF. Immediately it's updated on Adda 24/7. So that's why follow the channel, subscribe to it, click on the bell icon. Okay. The multinational company encounters the following exposures to foreign exchange. So which is the exposure this MNC will encounter? One is translation, second is economic, third is transaction, and fourth is all of the above. So what is the answer over here? Economic means what? Related to business. Economy, business. Okay. Transaction means what? Related to the buyer seller. Buyer seller. Okay, this is transaction. This may be affected due to the legal laws also. This can be due to legal also. Okay. Legal risk is also part of this only. And what is translation? Translation is when you convert the foreign currency, dollar currency, to INR, rupees. Notional. This is always known as notional. Translation risk is always notional. It is never physical. Okay. So which are the risks which this foreign company, multinational company encounters? All of them. Okay. Because all the risks are exposed when you are dealing in multiple countries. Okay. The role of hedging agent is to, now what is this hedging agent? Hedging, basically remember hedging. The role of hedging is to, forget this agent also now. So what is the role of hedging? Assist a firm in determining which foreign exchange transaction should be hedged. So why is this agent over there? Agent means it's a human being or a party or a company, anything it can be. So any individual, natural or artificial person. So what does that person do? It's a sort of help required. Okay. So assist the firm in determining which foreign exchange transaction should be hedged. So this company tells you what is to be hedged. Whether I should hedge a dollar, whether I should hedge a euro, or whether I should hedge some African country's currency. Will you hedge that? Suppose if I tell you to hedge Pakistani rupee today, will you hedge it? Not at all, isn't it? Sri Lankan rupee currency, if I tell you to hedge, not at all. North Korean currency, not at all. Chinese currency, yuan, not at all. So, what does this agent do? This agent has an experience. This agent tells the firm, assists the firm in determining which foreign exchange should be hedged. Second, assist the firm in determining the terms of the currency or interest rate swaps. So this is also a point. So the answer is both A and B, because hedging is an important tool. What is the hedging basically? Hedging means covers the risk. Suppose let's say I have brought let's say what Reliance share in market. Okay, Reliance, I have brought it at let's say 3,000. Okay. So why have I brought this at 3,000? So that it goes to 3,500 and I'll sell at that time, right? That is the basic logic, isn't it? Why do we buy anything? To sell. But imagine if this Reliance starts going to 2,000. So I'll be in a loss. Here it's a loss to me, right? To cover this loss, what will I do? I'll do hedge. I'll do hedge using what? Derivatives. Derivatives means it can be anything. It can be options, futures, forwards, swaps, FRAs, anything it can be. So the answer is both A and B. Okay. Everyone, for those who don't know the compulsory papers, check this: ABM, BFM, ABFM, BRBN, electives, rural, HR, IT, central banking and risk. So select the elective properly. No negative marking. Some subjective questions are there without options. Okay. So you'll have to input it in that screen using the virtual keypad. Okay. Now the batch. See this Sankalpa batch starting from August 4, both in English and bilingual. Join it as well. Huge discounts are going on. Let me show you how to join this. Okay. Go to Adda 24/7. Okay. Let me go to Adda 24/7 over here. Hold on. If you are having the app, I would always suggest you to go through the app. In the app, you are getting coin system. In the coin system, you will earn a bit extra, means around 1% extra you will earn. Go to Adda 24/7 over here. Okay. Now here, click on JIB and CIB. Click on CIB November. See this, November 23. Now you see the batches. See this. Okay. You can join this August 4 batch. It is in bilingual. You will see one in English also. So join the batch. Once you join this, you will see the details over here. All the details. Recorded videos, interactive classes, expert faculties. Then regular latest updates. Okay. Recorded videos means what? If you miss out on any class someday, then you'll definitely get back to it using the recorded classes. Click on buy now. Then look at this. 23,999 reduces to 4,799. Huge discounts. Join immediately. In fact, I would suggest you to join the Mahapacks. In Mahapacks, you are getting multiple batches. See here, I'll tell you. Go to JIB and CIB Mahapack. Okay. Click on, see the CIB Mahapack. Here you are getting multiple batches. Multiple batches means around 10 to 12 batches per subject. So that many times you are getting the revisions. All the product features you can read. Okay. So interactive classes are there. You can ask the questions there and then itself. Click on buy now. Look at this. 51,572 reduces to 10,314. And look at the validity. Double validity. 12 months. 80% off. Join it ASAP, isn't it? What are you waiting for? Okay. Chalo, bye from my side. I'll be back tomorrow with another series. Till then, keep studying and do join the batches ASAP because exams are near. Okay. We are in the Sankalpa series for BFM. In this series, we are covering all the important theory and objective questions for BFM. Today, we'll be covering objective questions. Okay. For chapter 1. Now remember, the questions are very tricky. Let's start. See, you'll immediately see the example. See this first one. The decrease in the value of foreign exchange rate, which is done intentionally by the government, is called as what? Appreciation, depreciation, devaluation, revaluation. Firstly, let me clarify some points in over here. Intentionally by the government. Where do you do intentionally? In JIB you had studied. What are the types of economies? One is capitalist economy. Capitalist. Okay. And second is what? Second, command economy, isn't it? Command, you had studied this in JIB, right? Command economy. So capitalist and command. Command means what? Where the government interferes directly, interferes, okay? Here directly in the forex. And here government doesn't interfere directly in the forex. It interferes indirectly. Here it interferes indirectly, and there it interferes directly. So this question is about this command economy. Intentionally, government decides that, okay, we'll reduce the rate today. Do you know which government does so? Name any country's name which you might know. Anyone? Many of you might be knowing. We read it in the newspapers, isn't it? Main is China. Means I'm talking of big economies. There are many small countries. North Korea is there. Okay, there the government interferes regularly. Brunei is there. But these, we'll leave them aside. Those countries which are in regular trade in this world. So China interferes heavily. Japan also, they reduce their rates whenever they want. They actually have reduced their rates many times. So China is the main culprit over there. So where it is done intentionally by the government, it is known as what? Appreciation, depreciation, devaluation, revaluation. Now remember, 2 points. A and B are related to market. Here the rates are decided by the market, and here the rates are decided by the government. Okay. So here when I say intentionally by the government, so it is known as either of these two, devaluation or revaluation. Now you tell me, is it C or D? Is it C or D? When it is done by the government intentionally, it is C. This is the answer. C is the answer. Okay. It's reduced intentionally. So it is C. Devaluation. Simple. Isn't it tricky? What did I say? The questions are tricky. And in exam also you will get such tricky questions. Which of the following is not correct in the value of domestic currency? Now domestic currency means what? There are two currencies. One is foreign currency, second is domestic. If you consider for India, dollar is what? Foreign currency. Rupee is what? Rupee is Indian currency. Means domestic currency. So what is not correct? See here, look at this question correctly. We want not means we want false. Whatever is false, we want that answer. So devaluation is done by the government. Not correct. Is this correct? Means devaluation can be done by the government. See here, if tomorrow Indian government decides, can it devalue dollar? Just type yes or no. If tomorrow Indian government decides that we'll devalue dollar, can it do it? Never. It can't. Why? Because dollar is not your currency. Dollar is the currency of USA. You have a control only on your rupee. So devaluation can be done by the government. So that is true. But what do I want? I want false. Revaluation is done by the market fluctuations of demand and supply. So what did I say? Devaluation, okay. Revaluation is done by market forces. Is this market forces? What did I say in the first question? Devaluation and revaluation are done by the government. So this market forces and revaluation, do they match with each other? So is this true or false? It is correct. False. So this is the answer I want. Revaluation is done by the market fluctuations of demand and supply. Okay. So this is false. Revaluation is always done by the government. Okay. Devaluation and revaluation are always done by the government. Appreciation is caused due to the change in demand and supply of the foreign exchange. Now see here, once you get the answer in exam, don't check this C and D. Once you feel it is correct, you move out. Move out to the next question. But here I am showing you because we are in the explanation phase today. Okay. So appreciation is caused due to the due to the change in demand and supply of the forex. So appreciation is caused due to what? Demand and supply, market forces, right? So this is true, but I want false. So this is true, and none of the above. So that is out. So my answer is only B. In exam, just check if there is some option called as B and C, B and D, A and B like this. Only then check the other options. Otherwise, don't check. Directly, if you see B, you find it correct, move on. We don't have time in exam, isn't it? Correct? Clear, everyone? Now, before going ahead, everyone subscribe to Officers Adda 24/7 YouTube channel. Sure, why? Because here in this channel of Officers Adda 24/7 YouTube channel, you get two important elements. What are the elements? One is free YouTube series, free. What are you watching right now? YT, free YouTube. What are you watching right now? YouTube series, isn't it? So free YT series you are getting. Number two, what do you get over here? Is latest updates from IIBF on JIB and CIB. All the updates immediately they are loaded on this channel. So that's why subscribe to it. Click on this bell icon immediately. Okay. Which of the following is correct? Now, which of the following is correct? Depreciation in value of domestic currency is caused because of fluctuations in demand and supply. Devaluation in the value of the domestic currency is done intentionally by the government. Appreciation is done intentionally by the government. And both A and B. Now think over it. Now just let me ask you one question. What is this here? I gave you two options earlier. Devaluation and revaluation. They are done by the government. So we want what now? Correct. But I'll give you a few explanations over here. It's not only this devaluation, revaluation answer. Question is why depreciation happens? Why appreciation happens? That is also an important point. Means you might be thinking in your mind, this depreciation in currency, appreciation in currency, why does this happen actually? See here, it's like this. Suppose if, basically these are done by the market forces, this C and this market, okay? This is also done by the market forces, market. And this is done by the government, right? So now the question over here is, this appreciation is done intentionally by the government, okay? Now the question over here is, of course, the answer by now you might have guessed. What is the answer? Everyone, first give me the answer, then I'll move ahead. The answer is correct, both A and B. Appreciation is done by the market, not by the government. Government does devaluation and revaluation. But now the basic question which is in your mind, let me answer that question. Why does the depreciation of a currency happen or appreciation of the currency happen? See here, if India is growing at 6.5%, let's say our expected GDP for this year is around 6.5 to 7%, right? This is the expected GDP. If you see, if we keep on increasing, maintaining the same GDP also, maintaining the same GDP in coming next 5 years, then what will happen? Our rupee will appreciate. Rupee will appreciate. It will go up because the value of our currency will go up because everyone will want to invest in India at that time. See here, all the countries in the world are growing at what rate? Developed countries. I'm not talking of any Tom, Dick and Harry. You'll talk of, let's say, Chile. You'll talk of Chile. You'll talk of African countries. You'll talk of that South American countries, right? Peru and all those countries. We are not talking of those countries. We are talking of those top 5-10 countries because here, right now, India is in which league? India is the 5th largest economy. We are moving. Yeah, just few days back, our Prime Minister wrote, we'll be 3rd largest economy in next 2-3 years. So, suppose if we are talking, we should always discuss the top 5 countries in the world. So, if we start growing at 6.5 to 7% also in the coming years, our rupee will appreciate. Why? Because other countries, which are the other countries? Do you know the names of other 4 countries? We are in the 5th level. India is in the 5th. Okay, India, 5th. So, which are the other countries? USA. Second, China. Third is this France and Germany. Germany will keep it higher. Germany. Then we have France. And then India. UK and everything is gone now. UK is gone behind us. All these countries are. Even we will take over Germany and France in next 2 years. Max to max. So our question over here was depreciation and appreciation. If we go on increasing or maintaining a GDP of 6.5 to 7, all these countries are growing at a rate of hardly 1%. Hardly one. China is growing higher. China is an exception, but China has its own internal problems. Huge problems are there. But remaining these three countries are growing at lower rate. Okay. So coming back, if we go on maintaining this GDP of 6.5 to 7, our currency will appreciate in the coming years. Okay. Got this point, everyone? So the answer for this question was D. This was the extra knowledge which you wanted, right? Because we have to know. See, there are two reasons for appreciation and depreciation of any currency. One is fundamental, and second is technical. Okay. Second is technical. Technical means what? It's a short term. Technical. This is short term, short. And this is long term, long. Right? So fundamental means GDP growth, government giving the impetus. These are all fundamental reasons. Technical means what? Short term. Broker, the middle persons, the brokerage companies, their views. These are technical reasons. Then interest rate changes in the countries. These are the technical reasons. Okay. Which of the following rates will be applied for Indian father sending funds to his daughter in USA? Look at the question. What the question is? This is India. Okay. This is USA. Father is over here in India. Daughter is over here in USA. Okay. Now father is sending funds to the daughter. See, father will send funds over here, then here, and then they'll go to the daughter, right? So if father is sending funds to the daughter, this father is having an account in India. This is, we'll call it Bharat now, not India, isn't it? You know that political implications of India now. So this is USA, right? So father is in Bharat over here, right? So what happens now? This father is having account in rupees. This daughter wants funds in dollars. So what will happen? Father will give rupees to the bank in India or Bharat over here. Then the bank over here will convert them to dollars. So what will happen? Convert them means what? Whenever there is a currency is going out, whenever dollars are going out, okay, we always follow the rule of selling. So here dollars are going out from India, from Bharat, they are going to USA. So if they are going from our country to USA, then it's a sell part, means out. So it is a sell. So I'll be using the sell rate. But sell rate, which sell rate? TT or bill? Now again the question comes, do I use TT rate or do I use bill rate? So these two are out. Now I only this TT or bill. So always remember, whenever it's a future dated transaction, forward, when I am dealing in forward transaction, means some 1 month after, 2 months after, then I am taking a risk. And wherever there is a risk, there is a bill rate. But here what is happening? Father has come over here and he wants to transfer the funds immediately. So there is no risk involved, today only. So in that case, I will be using the TT rate. So the question is TT selling rate. Okay, the answer is over here. TT selling rate. Always remember, whenever you are doing some transaction which is forward dated or future dated, you are booking a contract for 2 months, for 3 months, then it is a forward transaction. In that case, you will always use the bill rate. See here, in forward transactions, you will always use the bill rate, bill. In normal transactions, without any forward, without any risk, we'll be using the TT rates. There are other rates also. There is a TC rate, traveler's checks rate. There is a cash rate, cash. There are basically 4 important rates in this forex: TC, cash, TT, and bill. Cash, we use it when I am having cash dollars. Cash dollars, if I am having notes of dollars I am having, then I'll be using the cash rate. If I am having the traveler's checks, what is the traveler's check? Traveler's check, does anyone know? Has anyone handled traveler's check? Just type yes in the comment section. Traveler's checks, nowadays these are gone. Nowadays we have all cards, right? Cards have come in, forex cards. So have you handled this TC forex traveler checks or forex cards also? Forex cards are similar to TCs, traveler checks, right? So over here, the traveler checks, this is the TC rate. For this, it's a cash rate, and in our case, it is a TT selling rate. Everyone download Adda 24/7 app on your mobile. In this app, you'll be getting the premium study material plus live classes, ebooks, tests, everything you'll be getting. Okay, if you want to clear any exam, what do you need? One, classes, tuitions. So you're having live classes over here. Second, you need books. So you're having ebooks over here. Third, you need to check your knowledge. So you'll be needing tests. So these tests are also there. So subject-wise tests, topic-wise tests are there. So you get enough, all the three materials required for clearing the exam are available on this Adda 24/7 app. Download it immediately from Google Play and Apple Store, anywhere. Okay. What is the amount of post-shipment finance to the exporter? Firstly, what is post-shipment finance? Tell me. What is the post-shipment finance? See here, these are all the finances for exports. An exporter, let me write it over here. An exporter will get an order. See here, what is the exporter? Exporter means the one who is preparing the goods in India and selling them abroad. Right? Preparing in India, India manufacture. India, oh, India again. That has come in our mouth now. Bharat, right? Bharat manufacture and sending it to USA. USA, right? So manufacture over here and sent to USA, right? So in that case, this is known as the exporter. So what is the finance this guy is needing? This guy needs two types of finance. Mainly, there are others also, but mainly pre-shipment, shipment, and second is post-shipment, post-shipment, okay? Pre and post. What happens in pre-shipment? Pre-shipment is for manufacturing. Manufacture means what? Manufacture means all the raw material plus labor plus your running expenses, electricity, everything, electricity. Everything needed for manufacturing is used over here. And post shipment means what's here? It's like this. He'll prepare these goods and then he'll load it via, let's say, sea, okay, on a ship. So these goods will be put on the ship, and then the ship will go to USA, right? So when the goods are loaded on the ship, from that time itself, post shipment starts. When we get that shipped on board date, on board. When you get this on board stamp on the ship, at that time this post shipment starts. So what is post shipment? Post shipment means the goods are sent to USA. Now we are just waiting for the funds to come. So this post shipment finance is always given how much percentage? 100, 75, 60 and 50. It is always given 100%. Okay, it is always given 100%. Everyone kindly share this video with your friends also, because very important video, isn't it? You've got a lot of knowledge on this pre and post shipment over here. So that's why share it with your friends immediately. Click on the bell icon. Everyone click on the bell icon immediately. Subscribe to the channel. And pre-shipment, you'll say then how much is pre-shipment given? Pre-shipment is always given 75% to 85%, depending on bank to bank. Okay, depending on bank to bank. So 75 to 80% it is given. And post is always given 100%, complete 100%. Okay. The increase in value of a foreign exchange rate, which is done intentionally by the government, is known as what? Just now I gave you this example. The increase in value of the foreign currency. Okay. Now see here, one point, you might be knowing this answer by now, isn't it? Because first question was similar. There it was decrease, here it is increase. So who all remember this? Intentionally by the government. Whenever government does this, then what is out? Which of them are out? A and B are out. So this is out, this is out. These are done by the market forces, market. Right? And these two are done by the government. So here what are we talking of? We are talking of increase in the value. So first question was devaluation, decrease. Here it is increase. So the answer over here will be revaluation. Why does the government do this revaluation? Tell me. On what basis does the government does it? See here, firstly it is a command economy, as I told you earlier. Command means government wants it. Every supreme is government over there. Government wants to control everything over here. This is the worst type of economy. Always I'll tell you. This is the worst type of economy, and India doesn't have this command economy. India is a mixed blend. Some part government interferes wherever necessary, but majorly India is a capitalist economy now. Capitalist. Majorly. Always remember. Majorly, I'm saying we are a mix over here. Some part of command, some part of capitalism. But importantly, we are almost 80% capital now. Not even 80, 90% capitalist, only 10% command. Why does this government want to decrease the value or increase the value of any currency? There are many a times personal governments, the leaders who are there are personal obligations of these guys. If somebody in the government wants some foreign currency to come in, that person requires some foreign currency at that time. So that guy, if he is the supreme in that command economy, what will that person do? That person will devalue my currency. Means what? Suppose let's say I'm over here. Let me mark this over here. Let me explain you. See here, this explanation part is very important for you guys. Suppose if I'm in the command economy and there are dollars to come in. Suppose if there is some business of mine, I'm the leader, supreme. There are dollars to come in. So I'm in Bharat, so I'll be needing funds in rupees, right? So I'll be requiring funds in rupees. So what will I do? If $1 equals to 80 rupees, okay, I'll devalue my currency. So what will happen? This 80 will go to 90. Devalue means I'll bring down the value of my rupee. So what will happen? If I'm getting, let's say, $1,000, so how much I am getting? 80,000. So if I devalue, how much I am getting? 90,000 rupees. Okay. So I am getting higher currency of mine. So what will I do? If I am in the supreme economy, I'll devalue that currency if my funds are coming in. And if my funds are going out, dollars are going out, what will I do? I'll do the reverse thing. I'll revalue. I'll increase the value of my rupee from 90 to 80 because it's in my hand. There is a lack of transparency in command economy. Always, if government wants, they can do anything. You are seeing the same in China. Do you see any news of China somewhere? Any news? We never see the news of China. The news of China comes only from the official government, these channels. And that is always managed. So always remember, that's why I said the five economies. We are the fifth one, but China will have its own problems because they are not predicting the clear picture to the world. Okay, not our topic of discussion today. It's for you to think. Read as much as possible on Forex because these are affecting your daily lives. Everyone, this Sankalpa batch starting from August 4, today only. Join it ASAP. Today BRBL is starting. All the 4 subjects are covered, numericals, objective questions, case studies, everything is covered. Join ASAP. You'll be getting ebooks over here, tests over here, everything. What all do you need? How to join this? There are huge discounts available. Discounts means using this code JC80, you are getting 80% off. Let me show you how to get these discounts. Click on, go to Adda 24/7. In Adda, immediately I'll tell you, firstly go through the app. In the app, you're getting 1% extra. Using the coin system, you collect the coins and you are getting almost 1% extra over here. Click on JIB and CIB. Then you'll see the JIB October and CIB November. Click on CIB November. Okay. Now you'll see the Sankalpa batch over here. See the Sankalpa batch selection. Click on this. Done. See this. You are getting online classes, test series, ebooks. What all do you need? You need classes, test and books. That's it. This is what we need. 65 ebooks, 300 hours classes, 22 test series. Recorded videos are available. So recorded means if you miss out on any class, you can definitely get back. Click on buy now. Look at this, 80% off you are getting. 23,999 reduces to 4,799. 6 months validity. Join it ASAP. In fact, I would tell you to join this Mahapack. What is the Mahapack? Mahapack means you are getting multiple batches on the same subject. So this CAIIB Mahapack. Front page. Again go to front page. Click on CAIIB ka Mahapack. CAIIB Mahapack 2. Okay. Again look at this. Online classes, test series, ebooks, videos, everything you are getting. Recorded videos. Okay. 949 recorded videos. 216 ebooks. 92 test series. And 500 plus hours of online classes. So recorded videos means again the same I'll tell you. Because in banks nowadays we have a huge pressure. Everyone is for that insurance sale and KCC sale, right? So that's why we can't attend the classes many times. So that's why join this and get this. Once you join this, you'll get the recorded videos also. Click on buy now. Look at this. Validity, this 80% off you're getting. 36,837, 7,367. You're getting a huge discount over here. Join ASAP. Okay. I'll be back tomorrow with another series. Till then, keep studying and do join the batch immediately today. Okay. Bye.